Institutions only care about Bitcoin nowadays, according to BlackRock, the biggest asset manager in the world. Does this mean that you need to fade everything else in favor of Bitcoin? I'm not entirely sure, but big players are doing it, and it's important that we find out why. Hello, Chainspotters. Here we are with yet another read and review of the week. So today I'm going to be talking about an article that I wrote for DL News. I highly recommend dlnews.com. Go check it out on the My Lot byline, Pedro Solimano. It's titled BlackRock ETF Exec Says Institutions Only Care About Bitcoin. So I'm going to say this is a massive development, because it kind of puts a plug in, well, the institutional thesis for altcoins, the retail investment thesis for altcoins also to a degree, because it seems like a lot of the capital is going from massive institutions just into Bitcoin, parking it there, waiting and seeing. Formerly, altcoins or alt season would eventually get some of the flow of the capital that went in, but when you have such big flows that just head into Bitcoin and just stay there, then all these smaller amounts from retails or from crypto focused or crypto native investors, when I speak about those last ones, I'm talking about institutions that are dedicated to this game, things get a little bit more harsh. So this idea is actually according to Samara Cohen, BlackRock's chief investment officer of ETF and index investments. So she knows a thing or two about where big companies are putting their money in. Institutional investors are really largely focused on Bitcoin, Cohen said on the Blockworks Empire podcast, particularly in this environment. This laser focus on Bitcoin from Wall Street's biggest players reveals that during times of uncertainty, the top cryptocurrency is the only serious contender in crypto. Watch everybody around me and their heads explode into a million pieces, much like a million tokens that go around useless, coming up, coming down, pumping and dumping, singing away in an orchestra that makes no sounds. With the ongoing global trade war, which has forced investors to de-risk portfolios, Bitcoin's narrative as an uncorrelated asset has begun to resonate. Some investors have even said that Bitcoin has decoupled from equities, a recent development that suggests it's not just another risky asset like stocks. So this decoupling narrative, we're going to call it for that, has a few things that we should peel apart. For one, it's very early innings. So for years, Bitcoin has traded alongside tech stocks. So people have considered it somewhat of just a proxy for tech stocks, high risk tech stocks. Even though Bitcoiners would constantly try to peddle and spew and spin the narrative to say that Bitcoin is more like digital gold, it wasn't behaving like digital gold. It was just behaving alongside traditional equities. That's until these past few weeks when Donald Trump's trade war has pushed everything into disarray. Prices of everything are going up, and people are thinking to themselves, all right, where do I park my capital? Where do I start to look for investment that can give me some sort of, number one, outsized return, but also a return when everything is else going down? For now, that's been Bitcoin and gold. Gold by far, Bitcoin to a lesser degree. Now, even though stocks have traded upwards in the past couple days and weeks, the main thing is that Bitcoin has traded more so and dropped less so. So there's been a lot of talk about this decoupling. I see it across Wall Street, across whether that's ETF analysts, whether that's CNBC anchors, whether that's BlackRock executives like we're going to see further on. And this is also coupled with the dollar that's drifting lower. So the dollar index has been on a bit of a spiral down, not as much as Ethereum, which we're going to talk about now, but it's also dropped anything, I think last time I checked, 11 to 12%. That obviously makes a stronger case for riskier assets. That's actually one of the reasons. If you look at how they trade, Bitcoin usually trades inversely to the dollar. So the dollar goes up, the strength of the dollar, how much investors want it, goes up, and Bitcoin goes down. That's flipped now. So the dollar is going down and Bitcoin is going up. Do you get it? If you don't get it, feel free to subscribe, but then also leave me a comment. I read every comment. I comment on every comment. I want to make a conversation out of this, so it's not just me spewing stuff at the screen, but it'd be fun to make some sort of conversation, get the debate going, make things happen. So yeah, do you think decoupling has begun? And do you think that there is power to what BlackRock is saying? Cohen also dampened the mood for investors still hopeful of an alt season, a period when interest and price skyrockets for tokens that aren't Bitcoin. It is very unclear what the investment thesis is for a broad array of altcoins, she said. Even Ethereum, which has its own ETF and served to launch BlackRock's tokenized fund dubbed BIDL. Stupid fucking crypto people that think that because HODL is a thing, everything needs to be like HODL. So you have BIDL. The fuck is BIDL? Make it build. Why? Comes in a distant second. 4 wallets hold most of the 2.5 billion BIDL fund. The market size for Ethereum ETFs is a fraction of that of Bitcoin, with total assets under management sitting around 8.5 billion, according to CoinGlass. Adding to the dismay of Ethereum backers has been the token's lackluster price action. It is yet to reach a previous all-time high of 4,848, reached in November 2021. Right now, last time I checked, it's around 1,800, so it's a fair trek away. The amount of money, because the network's market value is sitting, or was sitting when I wrote this, at 219 billion. It's got a long fucking way to go. It's not looking good for Ethereum. But I'm not going to waste my time on dwindling things. But investors who are waiting for another alt season might have to be patient. In fact, 70% of 50 hedge funds that manage more than 5 billion expect Bitcoin's dominance to continue growing, according to a report from Crypto Insights Group. I spoke to the CEO of Crypto Insights Group, Andy Martinez, shout out. He actually thinks that alt season isn't necessarily not a thing, but rather capital is just becoming more selective. So it's choosing where to go. It's looking for protocols with good tokenomics that generate revenue, that have strong user bases, community, all that sort of stuff. Whereas during the initial ICO boom of 2017, money would just go into everything and anything. No fucks given. Don't look back. Don't buckle your seatbelt. Let's just fucking go. People made millions. Unfortunately, I wasn't there. Were you there? And if you were there, was there any token that you thought was going to crush it and then didn't crush it? I'm interested. And let me know your comments below. We're back to decoupling. Cohen's perspective aligns with that of another BlackRock executive, Jay Jacobs, U.S. head of equity ETFs. Jacobs said last week, if you zoom out, you tend to see the longer-term fundamental thesis of Bitcoin really drives it to behave differently to traditional assets. He spoke about a concept or a framework that they're using called megaforces. So megaforces are broad geopolitical disruptions and tensions that are forming around the world because of whether that's a trade war, whether that's AI, whether that's migration, that's sort of pushing investors to rethink their investment model. Remember, BlackRock takes long perspectives when thinking about this stuff. They don't buy for 1 or 2 years, not even mention like 1 or 2 months or 6 months like the rest of us fools do. I'm going to invest in Bitcoin or Ethereum or this and that for a quick pass and so I can make a bit of money. No, which is how you should be doing it. I did a story or an episode last week about how to actually buy the dip. Got to think in years, got to think in decades, got to think in generations. That's how the real money is made. And that's actually one of the biggest things that I've been thinking about in the past couple of years is sort of stretching out my time horizon and thinking about things in longer time frames rather than how much is this going to be worth next week or in a couple months, or the Bitcoin price went up today or tomorrow and this and that, which creates a sort of tension for me because I cover this on the daily. So it's in a weird scenario. This is pushing institutional investors, traditional 60% invested in equities and 40% invested in bonds, to figure out what the new sources of return and diversification will be for them, Cohen said. That's what's bringing them to private markets and to Bitcoin specifically. Hot damn. It's happening. It's fucking happening. The institutions are here. The institutions are buying. The institutions are doing what the institutions always said that they were going to do, or what Bitcoin has said that institutions were always going to do. So, are you following in the footpath of institutions? Are you paying attention to what they're doing? I don't know if you guys know Stephen Bartlett, CEO of a bunch of companies, but he's also the host of the podcast Diary of a CEO. And he was talking to Morgan Housel the other day, the author of Psychology of Money. He's a financial advisor. And he said that recently, after being a years-long Ethereum investor, he switched everything from Ethereum to Bitcoin because it seems safest. And importantly, because it seems that's where all the institutions are putting their capital in. And whether we like it or not, institutions know better what to do with their money than we do. So there's a big fucking lesson there, and something that I'm starting to think about increasingly lately. So yeah, let me know in the comments below what you think, what you jive, and what you dive. I'll choose to read your news next week. Let me know if there's any articles that you want me to analyze, sift through, digest, and toss out my opinion into the never-ending void that is the internet next week.